going with our guest on the show today. We have Sudip Bandyopadhyay as well as Mileen joining us to talk to us about what's happening in the market and what the outlook is looking like. Sudip, hi, thank you so much for making time and speaking with us. I want to begin by asking you, 20,000 seems to be in the bag. Where do we go from here on?
Well, I think 20,000 is definitely in the bag. It's a matter of time before we hit that. There are a little bit of setbacks because of the corporate earnings have been, in some instances, much below market expectations. Also, there are certain concerns as far as US corporate earnings as well. We did see Tesla and Netflix earnings were definitely much below what the market was expecting. So a little bit of caution, a little bit of profit booking, a little bit of consolidation near these all-time high levels or 20,000 levels probably is par for the course, and I think it's a healthy thing. Having said that, I think if the monsoon continues and doesn't really disrupt the economic activities, and also corporate earnings, corporate performance continues the way it is by and large continuing, it should be definitely positive for the markets, and we will definitely see 20,000 levels, maybe the next week, maybe the week after, but it will come. The question is, where do we go from here? Our belief is that market will maintain positive bias. The primary thing which is driving the market and will continue driving the market is ample liquidity, which is coming to India both through FIIs and also domestic HNIs and domestic retail investors. The way the markets and the economy is poised, this will continue. The China plus one factor or China exit China, enter India factor is playing a big role in FIIs moving money into India, and that will continue, considering the geopolitical situation, considering what's happening as far as Chinese economy and Chinese growth is concerned.
Okay, so the stance remains positive on the Indian markets, definitely. But the IT was the spoil sport, Mileen, in the week gone by. But if you look at the IT index, after a sharp run-up in the couple of weeks, we have seen that making a halt exactly at its 20-day moving average. So how do you see the index going ahead? Because after the sharp fall on Friday, all these IT stocks were under tremendous pressure. So do you believe that going ahead they should take a pause at this point in time, and then maybe in a couple of weeks they should continue their uptrend?
Good afternoon. You have said it rightly that at present the prices have fallen down with a gap, and the gap area is very large, and now the prices are at the 20-day moving average line. So there are two supports for IT index, that is 29,785 and 29,180. But there is quite strong demand at lower levels. So again, we could see a kind of a bounce back in this sector, but the trend has not significantly changed in IT sector. It remains intact. Only this gap area has to be filled. But I would say that one should not exit at current levels, wait for a bounce and then try to exit your positions.
That's a take coming in as far as IT sector is concerned. But banking stocks, I think the limelight will shift from IT to perhaps banking with a slew of earnings lined up next week. But Sudip, do you think it's time now that the leadership will change? Of course, HDFC, of course, had its issue with respect to merger. That should be out of the way now. Kotak Bank has been in a slumber. Do you think it is expected to get out, and even ICICI Bank will join the party?
HDFC Bank definitely should join the party. You are absolutely right. It's been a kind of a slumber. The merger and the uncertainties surrounding the merger. What will happen to the the retail deposits? How will HDFC Bank handle the business which is coming in? And these questions were there. And obviously, in such kind of a merger, there are question marks. But I think the way the things are happening on ground, I think it's pretty robust. And HDFC Bank definitely deserves a relook and probably a re-rating. And I won't be surprised if HDFC Bank starts moving up very fast in the near future. We have been recommending a buy in HDFC Bank at these levels to the investors who have 1 year plus time horizon. We also like, amongst the PSU banks, SBI. I think SBI deserves a much better valuation, and we will probably get to see that in the future. Not only the bank is doing well, loan growth is good, asset quality is improving, but the fact is all its subsidiaries have been performing exceedingly well. So it does deserve a re-rating. Some of the smaller banks, Federal Bank came up with numbers, probably it was not to the market satisfaction, but the activity around it, the QIP happening, a subsidiary, getting listed, and things like that will create buzz around the stock. And I won't be surprised if this Federal Bank also starts moving up pretty fast.
Okay, Sudip, I just wanted your take on how are you looking at the, what are your expectations from the upcoming Fed meet, because the markets are penciling in that there could be a 25 basis points hike yet again this 26 July. What are your expectations, and what's your expectation on the global market setup? How do you see the global markets reacting to that decision?
But I think the global markets have by and large baked in that 25 basis point hike by Fed, and that should be absolutely no impact of that. What the market actually is very keenly going to watch is the pivot. I mean, whether the Fed pivot changes to a benign interest rate scenario going forward. They may not start or give a specific timeline, but if they indicate that probably assuming the inflation remains under control, they will start holding back any hike in the near future and look at reducing rates maybe in the next fiscal as far as US is concerned. I think that is what market will look for, and that will be music to the ears of the market. The macro setup in US is probably indicating that, and should facilitate a Fed pivot at this stage. Overall, I think the soft landing which the Fed was attempting and the analysts or the market was hoping for is becoming a reality, and hopefully I think things will remain in this manner. So overall, I don't see too much of concern as far as global markets are concerned as well. Movements based on corporate earnings and other news flow will keep happening, but fundamentally the concerns, I think, are gradually getting out of the way.
That's a take coming in. As far as the Fed meeting is concerned, yes, the highest probabilities of a 25 basis point hike and pretty much factored in by the street. The big question will be whether the commentary from there is dovish or hawkish, and do they point to any more rate hikes in future.